Hello, 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 mic test, mic test, mic test. Hello, 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 mic test. Hello, guys, and welcome to the 156th edition of the Trading Opportunities webinar. Hopefully, the microphone is working fine, and screen share also looks to be good on the YouTube live stream. Let me know if there's any issues or if it's fine. Just confirm it as well. And at least at my end, it is looking fine. So I'll just get started with the introduction. First of all, guys, my name is Nirav. I'm the admin on our 50eyes.com website and 50eyes Market Analysis YouTube channel. And this is the 156th edition of our weekly webinar series called Trading Opportunities, wherein I come in and discuss various different markets. So far, in the past 155 webinars, we have discussed a total of 386 or caught a total of 386 trades in these webinars, and all was obviously discussed publicly and live. Hello, Dharmesh. And in this webinar, we'll have a look at all the major instruments which we discuss generally in these webinars, right? Let me just quickly check. Good evening, Raghu. So that means audio and visual feed is working. All right. So let me get done with the introduction very quickly. And apart from these public webinars, I do have a book on the subject matter of Elliott Wave, which is the main means of technical analysis which I use for these webinars. You can have a look at it if you are intermediate to advanced in the subject matter. And if you are a complete beginner, you can have a look at the video course, which is available via the website. You can just check the middle option. Apart from all this, we do have a track record of our past work since 2016, and we have so far kept an accuracy, or the accuracy has remained higher than 80%, which beats all industry standards. You can check year by year record here, and whatever happens after 2021 is documented here in the playlist. Anyways, that's about it for all the introduction. And if you are looking to catch me live or my work live, then we do have a private Slack group. You can send inquiries for that by requesting details for Slack private group via our contact us page. And if you are interested in more updates or weekly updates, you can just subscribe to the mailing list, which is completely free. Right. That's about it for the very quick introduction. And now I'll just one last thing here. We generally cover the instruments in this specific order. Hello, SB. In the specific order of Euro USD followed by crude oil, gold, S&P, and BTC. And the way we look at it is first we'll check what happened in the last webinar, then we will check what is happening on the current chart and discuss the details. So if you have any doubts or questions, you can just ask them once we have discussed the current chart, and I'll take that. Only live questions, that is the questions put forward in the live chat, is what I'll consider. That's about it for our intro, or whatever you like to call it. And now we would like to move forward. Thank you, Mr. Raj on LinkedIn. So first of all, let's have a quick look at what was being discussed in these webinars on the chart of Euro USD. So here we are with the recording from the last session, which was conducted on 7th of this month. Let's see what was being said on the chart of Euro. Let's just move it a little bit forward and check. So 1, 3, 4, and 5th. We were in the wave 5 and we were looking for a long setup above 1.0894. So looking for longs above this level. Let's see if something else was also discussed. Looks like that was about that. Now let's head over to our actual live chart of Euro. Here on screen, we do have the live chart, and let's just check what happened since our discussion on 7th of this month. So as you can see, 7th was somewhere over here. We were discussing it, and whatever the upside level was breached, and the market did go up. 1 second, let me just check the actual level for a second here. 1.0894. 0894. So this was the long, what do you call, conservative long, and did go and did give us a breakout trade. So as far as the analysis is concerned, I would say it's a +1. And as a matter of fact, we'll also look at some of our past trades on, or this week's trades on euro, because euro we had, let me just show you for a second here. We had an exceptionally good run on euro this whole week. As a matter of fact, you want to check after 7th, anything posted after 7th. So here it is. Scalp shorts, and then I did scalp shorts. Scalp shorts closed in net profits. That was one trade. So far, so good. And then we had a swing long going on, which we discussed in the webinar. So then we entered more longs from a scalp perspective. This is a free trade now. Our stop loss is, I think, above entry. Booked profits on longs. Here is the whole chart. This whole thing was obviously tracked in live market. And then after exiting the scalp longs, I have added more longs back again. 3 trades so far in the short term or scalp trades. And our swing longs are still active here till March 12th, as you can see. Swing longs, we are adjusting the stop loss, so it is above entry now. It's also a free trade. And I've entered some minor longs again. So around 4 trades on this chart, and we caught downside or down move as well as upside. It was a hell of a week for trading euro. I think that was the main thing I traded this week. We did have a few trades here and there, but S&P, I think, yeah, S&P, we took a short trade yesterday itself. But euro was performing exceptionally well for us. Right. Anyways, the theme was all the same, which we discussed in the public webinars. And if you had followed along, you probably would have benefited. What about the private Slack group members? Were you able to catch euro? Etivat is not here. He was able to catch almost all the moves. He has sent me his screenshots of the trades as well. Let's just go through the comments for a second. Hello, Dharmesh, Raghu. Good evening to you. Thank you, Mr. Raj from LinkedIn. Hello there, mate. And hi, Joe, one of our private Slack group members. And good morning to you, Luis. So yes, what I was saying was that we had an exceptionally good run on euro, and what I would like to do now is move forward with our current chart. 1 second. So here is the live chart on screen on euro, and as you can see here, we are assuming that actually it can be counted in some other ways. I'm just assuming it as a simple nested impulse kind of structure. We have a wave 1 over here and wave 2 over here is what I'm assuming. The basic consideration here is that from this point of reference, we have a corrective structure in play. Let's just mark it and take things forward from there. So the price level is coming around 1.09474. The time is around 12th March. And we have a corrective structure, which I have identified as WXY kind of structure, a complex correction, wherein I have marked this level like as a W, this as a X, possibly as a triangle, A, B, C, D, and E. Right, and then this is the Y leg. Now, of course, this can be counted in some other ways, but so far I've assumed it like this. If that is the case, then this will make it a 1 here, a 2 complete here. And I'm assuming that this market may be now hovering or looking to go to the upside, right? And while I have not labeled it, we can simply look at it as a lower degree 1. Let's just call it dot 1. And this is a dot 2, and then this will go probably as a dot 3, and then a dot 4, and then dot 5. So on so far, this is the assumption. Basis on that, I have also taken in some long trades here. Not a big position because I'm not 100% sure on it. Stop loss is very much required here because the position is not completely clear so far. So I have kept my stop currently at 1.08504. One second. Yes. So somewhere here I have kept the stop. Right. The idea is simple. If the structure is correct, then we can see an up move from here. And actually the stop should be here, 1.08343. Probably I'll adjust it later, but for now I have kept it here. My assumption was it will not give a deeper pullback. Seemingly that is not how it is. This market has planned to work out so far, at least at this point in time. Anyways, long story short, it's not a very high probability setup as of now. As I just mentioned, keep a strict stop loss. Position size is very small for me right now, and I look to enter more once the market takes out 1.09265, or basically this resistance level zone, whatever you like to call it. Once the market goes above it, I look to add more. You can also look at it from a simplistic perspective and call it that we are looking for a breakout long go above 1.09461, whatever that is on your chart. Keep in mind we are using this data feed, and for you it might be different. The price might be different if you are using a different data feed. Nothing much to add here. If you have any doubts or questions, you can just push them in the live chat. Well, I'll just quickly check what else is there to say. Secondary possibility, yes, that is what we would like to discuss right now. If the market decides to continue with the correction, then it can form another leg down, perhaps as a triple zigzag, or perhaps the whole structure will change. Who knows? But so far, we have identified a possible support region around 1.0779. And if the market takes the support over here, then we can again look for new long opportunities. Obviously, at that point in time, our current longs would have been closed in loss. So that's the another important thing on the setup. Apart from this, I don't think there is much to add here. It's probably more of a wait and watch kind of market here. I don't see any questions here either. So what I'll do is I'll just quickly move over to our next chart of CL. Do let me know how's the pace, if you're understanding what I'm saying, or it's just a fast chit chat to you. So here is a discussion on the chart of crude oil, which was done in our last webinar, and let's see what was being said. We were assuming that there is a 1, 2, 3, 4, 5 kind of. No, that was a secondary view, I think. The primary view, I think, was that the fourth is continuing. Let's just back it up a little bit. Yes, that was the primary view, that we were assuming that this market is in a impulsive structure down when the current structure was possibly inside a wave 4, and once the wave 4 is complete, then we will have a leg down for wave 5. Right. So basically, we were expecting more bearishness on this counter in our last discussion, which was done on 7th of this month. Right. And the price at this point at that point in time was 67.243. 67.243. Let's now head over and check the live chart at once. So here's the live chart on screen. Before discussing anything, let's check 7th March. 7th March. 7th March is over here. 67.243. So the market was over here somewhere when we discussed, or when we connected the last webinar. It did go a little bit up. It hasn't really given us any short trade. So basically, the hypothesis which we discussed hasn't really played out for us. Right. So let's now see what the market might be doing. For that, let's check what's the point of reference we are using. So at this point in time, we are using this as our point of reference. Price level is around the price level of 73.442, and the time is 20th February 2025. Pace is okay at the moment. Thank you, Joe. That's good to know. Anyway, so what I'm saying is that we are still having the same kind of view. We are still assuming that this market is heading down as an impulse, wave 1, 2, 3, and this correction is currently looking to be in possibly wave 4, though I have not entered anything. Right. So now let's see what's happening after removing everything. Let's just dumb it down or simplify it. So as per Elliott Wave, we are looking at an impulsive structure. Wave 1 down, 2 up, 3 down, 4 up. And then the fifth down is what we are assuming. So here is our 1, here is our 2. Here is our 3, and the 4 is generally what we call a sideways kind of structure. It could be zigzag, flag, triangle, complex. It could take multiple forms. Here I have assumed that maybe the fourth is complete here. Again, that's not really a sure thing, but that doesn't really matter once I clarify the point that 4 generally goes sideways, and this is the box range we have right now for the 4. The lower part is at 65.46. Upper range is at around, roughly speaking, 68.36. Within this range, we are assuming that this wave 4 can continue as long as it is within this range and does not break to the upside and move above this level, let's just say. Then we can say that this analysis is holding just fine. Why have I not entered the shorts? Because in this kind of situation, it is better to wait for a break down. I would not say better to or anything. I just had better trades here and there, specifically Euro and S&P and all that. So I have not entered anything here. The primary assumption I have is that we will look for shorting. Actually, the conservative setup would be to short below 65.56, but that is too low. Perhaps I can enter some shorts around 66.15 something. And as the market continues lower, I can add more shorts. So basically, the assumption is somewhere here we can add short one lot here, and then as the market continues, we can add 2-3 lots here. I'm just giving you a rough idea, right? So add as more confidence, as we gain more confidence on this counter, right? That's our primary assumption. Target levels I have already marked here, 64.95, followed by another target or assumed level of support at 65.25, 64.25, sorry. So, right, so this is the assumed level of support. If the market continues, I'll play. Again, as I said, I don't have any positions on it right now. I'm waiting for this market to break below 66.15. So below this level, I'm looking to enter some short trades. That's about it for our discussion on WTI crude oil. Definitely something to keep in the watch list. Hello, Marco. How are you doing? One of our private Slack group members. And Etivet, good evening to you. Right. So this is about all for it. If you have any doubts or questions, you can just push them in the live chat, I guess. Hello, Conrad. Nice to see you back in our live chat. Right. And yes, good time for us to request that kindly do share the content after the webinar is complete. We have been conducting these webinars for a very, very long time now, and the views are kind of not that as we have assumed. For instance, the last webinar even did not crest 500. So it's my request that kindly share the content in Slack, Discord, WhatsApp, Telegram, whatever you use to connect with your trading members if you have a trading group. If not, you can just share it on Twitter, Facebook, whatever you use. We have social media for everything. I guess I don't use Insta that much, but we have social media and I share it here so you can share the link. And we would like to reach the what do you call right audience so that we can gain more views and the right views specifically. So kindly do your part in allowing us to continue these webinars. Right, that's my request. I don't see any questions related to the discussion, so I am assuming that everything is going well. You guys are all on the same page. And with that being said, I'll just now move over to our next chart of gold, which I assume most people are here for anyways. So first of all, let's load up the chart from our last webinar. And here on screen is the discussion from our last webinar on the chart of gold. Let's see what was being said and what has happened since then. Somewhere here we were discussing gold. We were assuming this a 1 up, 2 down. Let's see if there is something else or something more specific. What was the setup? So we are assuming that the market is probably just continuing. No, that's a long-term time frame discussion. That was an answer to a question. Where's the main discussion? So the main idea we had was, let me just zoom in into the last discussion, which was conducted on 7th of this month. We are assuming 1 and 2 and possible 3 up. I can't see the setup itself. I'm assuming this was the level 2940 plus, right? But overall, the idea was we wait for the pullback to complete and then we wait for a breakout long or just long above the 2940 mark, right? I don't know what the whole thing was, but kind of looks like that was the idea. And this was some higher time frame discussion. Right, so I'm going to assume that 2940 plus perhaps was the idea. You can check the whole discussion at your own in your own time. I don't want to take any more of time for this webinar. So where are we? 7th March, 7th March, 7th March. Where is 7th March? There it is, somewhere here. So whatever this is, we were assuming 2 is continuing and 2940 did got broken to the upside. The market did go up. So the analysis has performed +1. I think we had a trade here. Yes, we had a trade here on gold. I don't think we were able to capitalize on the whole move, but I definitely was able to capture a part of it. Let me just very quickly go over the last few trades. We were mostly involved in euro trades this week. Where is gold? Let's check after 7th March. Long auto close, stop loss was hit, however, discount. So right after webinar, I think we have it. No, that's before that's last week's. For now, possible wave 2 nested impulse, no longs. Wave 2 never came. Yeah, so I was waiting for a pullback and I missed the actual big move. But later, yes, after this, I was able to enter longs. It was a rather short term play. 2973, and then the exit is at 2994. So not a very big move. We could have captured all of this, but I was actually waiting for a pullback, which never came. So that was the issue here. It's greater than 5632. We'll have a look at it. So anyways, gold +1. Hopefully some of you guys were able to capture it live in the markets as because it played out as we discussed in our public webinar. I'm sure the people in the Slack group were able to capture it. And obviously, if someone here could also comment it, that will be great. But anyways, we have posted a live trade and seen it with our own eyes, so that's not an issue. That being said, let's now have a look at what we think might be happening here. So let's see what's the point of reference, what we think is happening here. So here's our point of reference, price level 2833 around 28th February. We are assuming that we are in an impulsive structure to the upside. We are assuming that we have wave 1 and 2 already complete. Those of you not familiar with Elliott Wave, this is what we are really doing here. This is the rough structure we are looking at. On the live market, we are assuming this is the 1, this is the 2, and then this is the 3rd in play. And given the, what you call, fractal nature of Elliott Wave, waves 1, 3, and 5 will have 5 waves inside of them. So basically, if we magnify this 3rd wave, it will have something which looks like this inside of it. So 1, 2, 3, 4, and 5. So this is your 1, this is your 2. And I am assuming this is the 3, and this is in play for the 4, and there will be a 5th here, which will complete the 3rd or this 3rd. Right? That's my rough assumption. Let me just double verify it. That does not look like the case. This is minor variation here, I think. Okay, so I have assumed that the 3rd is already complete. This is the 3. So let's remove everything. So anyways, it's not as much of an issue. In both cases, we are expecting a pullback. So I'm assuming that this 3rd is complete. Once this 3 is complete, we expect a pullback, and that is what we have assumed is happening. And you can say it's already in play. We are assuming support is around 2975. The secondary support is 2957. So the ideal strategy in this kind of situation is to wait for the market to go near the support. It has already done that. In some cases, it might want to go to the lower support or 2957. That does not happen. We always have the breakout long kind of setup here. So I don't have any sort of real hurry to enter this market. And personally, I would like to enter above. Oh, it is at 3000. It has touched already. Hmm. So that is a very good psychological level. So maybe the pullback can become bigger. 3000. It's probably the first time it has done that. So we have only till since 70s. So that is heavily likely that this market probably will give a deeper pullback. So just be mindful of that. Reason is very simple. The psychological level of 3000 could be a good profit booking level. Who knows? That's just an assumption I have. But anyways, from an Elliott Wave perspective, we already are in a correction and we already have discussed the possible support levels. So wait and watch for now. Breakout longs entry above 3000 and stop loss once it breaks 3000 would be conservative stop will be at 2958, or you can just use the last swing low, whatever would be at that point in time. For instance, if the market does something like this and then breaks out, then this will be the stop loss. But the conservative stop loss, as I just mentioned, would still be at 2956 or lower than 2956. Let's say 2950 something. As said for my discussion on gold, I don't think there is much else to add here. If it just continues to the upside, then targets aren't much of an issue either. Above 3000, it can just continue the rally very fast. Let's check something anyways. Check that first. So it hasn't even achieved the 161.8. So maybe this 3 is still continuing. Thirty, 30, 30, 80, and so on and so forth. Roughly speaking, 30, 30, and perhaps higher levels. And as I said, if it's in a long-term bull move, which it is, then these targets are kind of not that important anyways. It can just blast through them and on so on. Nothing much to add here. If you guys have any doubts or questions, you can just put them in the live chat. Otherwise, we'll move over to the chart of S&P, which will be our second last chart. Those of you who are joining the webinar now or watching it later on as the recording, my request, kindly share the content, guys, once the webinar is complete. And perhaps even before we start the webinar, once I share the link on the public platforms like Facebook and Twitter and so on and so forth, LinkedIn, because we do seemingly have not reached a very optimum number of views. So your kind support is very much required to reach the right audience. That's the request. So anyways, with gold, I don't see any questions here. So what I'll do now is I'll just load the chart of S&P from our last discussion. Here's the chart of S&P 500 from our last discussion, and we were assuming, is that the only thing we discussed? So here's a long-term outlook. We were discussing the possibility of a big bearish move, and I was discussing the possibility of a diagonal structure, which will then be followed by a leg down. Right. Let's see what else was being said on this chart before we move forward. So here were some support. It's a support region 5920, 5620 to 5520. It's actually 5630 to 5500. And then there's a secondary support. And then I'm assuming some scenarios after that. And in the shorter time frame count, I think we are assuming that maybe we are looking at a diagonal. Let's play the thing. That does look like the case. All right, so we were assuming that if we do get a pullback, if we are lucky enough to see a market pullback till the resistance level, then we perhaps might be able to capitalize on it. Second review was the whole thing is complete, which was, I think, less likely scenario. Let's see what else was being said. I don't know. It looks like we are biased towards the bearishness, and I'm assuming a pullback might be likely. And I'm, as always, discussing the classical Elliott Wave setup of market taking trend line resistance and so on and so forth. Anyways, let's now head over to the live chart. On screen, we have the chart of S&P. Let's see what has happened since our last discussion. 7th. So market has continued lower. There is no doubt about it. Actually dropped right after our discussion, I think. Yeah, there it is. Here's a drop. We were able to capture this move, I think. 5519 was my profit booking level. Maybe, I think. Let's just check the actual trade before we see the live chart. Here's the trade on S&P, which was pulled yesterday itself, I think. Yes, yesterday. So at its scalp shorts, the price was at 5536 and immediate target was 5519. So around 16, 17 points roughly. Take profit was set at 5519 and it smashed through it, went even a little bit lower. And after that, the market immediately reversed. So that was a quick trade we had on S&P. I think that was the only trade in the week on S&P. Right, now let's look at the live chart and see what the counts are suggesting to us. Here is the important part here. It is not following my last view. Here's the point of reference I'm taking here. All right, so from here, I'm assuming this is a fourth. Let's just call it POR. And after that, we have assumed that the fifth is complete here as a double bracket 3 completion. And 1 second, that does not look very correct to me. A, B, C, D, E. Yeah, that's how it should be. All right, so what I'm assuming here is the fourth is complete here, and then the fifth is complete here, completing a double bracket 3 here, and this makes last point of reference somewhere over here, price level around 5506, sometime on 13th March. And my primary assumption was that if this market is forming a diagonal, it will probably give a pullback below 5552. We can enter some scalp shorts. Nothing like that happened. So my primary assumption is that this market is in some sort of correction, specifically a wave 4 correction. And once this correction is complete, we may look at another leg down. Of course, I might be wrong here. The reason for saying that is actually anyone can be wrong at any point in time. My main point is here that we are in sort of a possible correction. So any move up should not be taken as an opportunity to buy. But if you are taking it as an opportunity to buy, use the strict stop losses. Now let's look at the main theme here. If this is a wave 4 double bracket degree, then we can take resistance at, what is this? 5626. Call it 5700, let's say. So it's already at the first resistance level. And if the 4 wants to complete here, it can complete here. Could be followed by a down move from here. If it wants to go up, it can just take a correction here and then give another leg up. Could be double zigzag. Maybe it's doing something else. or it could just go sideways within this range, which is what I primarily assumed. What I am assuming here, let me just point out with a more clarity. I'm assuming here that it has already formed this much range, so any movement within this is possible for a subsequent amount of time before a fall or a break lower. At the same time, it is also possible that this market will extend the range to 5700, hence going from yellow box to the white box, and then spend as much amount of time as it wants to within this range before giving a breakdown. So all in all, I am assuming that as long as the market remains below 5700, we are assuming that this market can break lower, and this is a bearish market. Of course, if I'm wrong, the primary idea for considering bullish bias will be that if this market sustains above 5700, we will assume that maybe something else is going on. Maybe I have miscounted it or miscalculated something. But even then, I'm still not going to consider this thing as a bullish outlook. And before we move it any further, I just want to check one more thing from our last discussion. Here's the recording 56305500. That's just what I wanted to check. 5500. How much better can it get? It literally went to the marked support region. I don't know how many of you guys watched these webinars, but this is what 300. This is the third trade in our last week's discussion, public discussion, which has worked. So in total, we are now at 389 trades, which have worked in our past 155 webinars. I mean, don't you guys even catch one of these trades? Not talking about the private Slack group members. What about you other guys? You show up in every webinar, and I don't see any comment stating that you were able to capture it or capitalize on it or anything at all. Do you guys just come here for the heck of it or what? I mean, it's not an entertainment webinar. And that's something I have always been puzzled with. So, anyways, who knows? Maybe people never watch it and these are all bot views. Yeah. So, anyways, this is one of our another trades which has worked out. And as I just said, I'm still not convinced that this market is heading for the upside. It could be, of course. But even if the market goes over 5700, I'm assuming it could just be a pullback, like something like this. And it could just be heading lower. So my bias remains bearish for the coming sessions, right? If I'm wrong, then I will probably figure it out a little bit late. Maybe I'll figure it out during the week. But my primary assumption remains bearish. Trade setups, since the market is in a pullback, I'm not looking for any longs. Maybe I'll pull some scalp longs, but that's about it. More biased towards the downside. So no real trade for now. We'll just wait for the market resistance level at 5700, and if the market goes near those levels, we will probably look to add shorts there around 5700. If the market goes above it, then we will reanalyze the thing, and then later on we will consider what to do. Wait and watch market. No, what do you call, immediate trade for now, right? Let's check on SPX. You're long. Well, it's not much of anything I can do with your trades. Hello, Zarif. All right, guys, I don't see any questions here. If you have any doubts or questions, just push them in the live chat. Otherwise, we'll move over to our last chart of BTC. So here's a discussion from our last webinar. Let's see what was being said on the chart of BTC in our discussion on 7th of this month. I'm assuming a WXY, XZ. I think let's just play the thing. Above 99,400, we may look for longs. Otherwise, I'm assuming it could be progressing as a triple zigzag. I think that's the main theme. Let's see if anything else is discussed. What about the triple zigzag idea? Have I even considered it in detail or just, yeah, there it is. So we have assumed X followed by a Z correction. right? That was the main idea on Bitcoin, right? And seemingly it is what this market has been following. Now let's look at the live chart. Here it is, BTC. Thank you, Joe, for the confirmation. So here on BTC chart, what we are seeing is literally what we just discussed. The market has, after the correction, one second. All right. So there I have assumed in our last public webinar, I think I have assumed it as WXYXZ. But here the count is a little bit different. Let's check that again. Should be going 1 degree lower here. We are assuming the point of reference at 106,000. Yeah, so the point of reference is correct. I am just assuming that the count is a complex structure in our past webinar, though that doesn't really affect our bias. So let's just go with the assumption from the last webinar itself. 1 second. Let me just refer back to it. W here, X here, Y here, and correction continues X and then Z. So here it is what we are assuming from our last webinar. We are assuming the W here, X here, Y here. And what we said was that this whole thing could be just a sideways range. Market can just propagate within it and perhaps break a little bit lower to the downside. Spend some time and go for the Z here. Now it has done literally nothing else but that 7th March was somewhere here. So since then the market has just been propagating literally as we expected. Two things are possible here. The one thing is that perhaps the Z is already complete here and this market can just take off. Second thing is that perhaps, this was the X and the Z is already complete. And perhaps this is the X and the Z is still continuing, still remains in the unknown. Long story short, long play, we still need to wait for 94,000 plus levels, right? Basically this high. So whatever this is on this current chart, it looks around 94,400, 500 something. If you are using a different data feed, then it might be a little bit different price level. So we want the market to see move above this level, and then we will be interested in possibly considering the bullish bias, right? That being said, we have discussed all the main charts which we generally do discuss in these webinars. If you have enjoyed the content, I request as always that you consider sharing the content as much as possible with your friends, colleagues, and on your social medias, in your trading communities. If you have any social medias, Reddit, Twitter, Facebook, whatever you use, and help us reach the right audience and the right number of views or greater number of views. And of course, last thing, if you have any doubts or questions on this live chart of BTC, which we have on screen, you can just push them in the live comment section or live chat section, I should say. Otherwise, we can consider this webinar as complete. So here are some questions. Raghu has asked if we had decided on the new instrument. That's a good thing. I didn't even get the time to discuss anything. I got too comfortable with having less things to discuss publicly, actually. Probably I will have to take some time and think about it. But as such, we are finding better trades on the limited number of instruments we have. Give me a month or so. Let me see what suits my time limitations and personality. As a matter of fact, I do analyze way too many markets. I can just add any of it, but I generally don't find them simple enough to be discussed publicly. So I will not make any more promises. I just need some time, let's say a month or so, and if I feel comfortable, I'll add something. Otherwise, we'll just continue with what we have. Because let's be very honest here. If I was very keen on adding something, I would have added it already. Yeah. Anyways, if you have any suggestions, Raghu, do mention them in the chat, or you can just mention them later on in the Slack. I'll look at it, but then again, I will not make any promises at this point in time. You're very welcome, Louis. Welcome, Audrey, and of course, Joe. Thank you for the nice comments, guys. Thank you to all those who stayed till the end. And as always, do consider my request and continue sharing the content so that we can reach the right audience. You're very welcome, Marco. So thank you for staying till the end, those who did, and take care. And I'll see you guys in the next one.